Perfect. Well, hello and welcome to today's webinar, How to Offer Cash Flow Advisory Services with Nick Fox, CFO of Vital Edition. Now, for those of you who maybe haven't joined us for some of our webinars we've run lately, they are run in sort of a cloud leaders Q&A style. So generally, there is an interviewer. That role will be taken by myself as well as Alistair Lamont, that we'll introduce in a few moments here. And what it's all about is basically digging a little bit deeper into, that service, that, really thing that either that firm does really well or something that they're really passionate about. And through this Q&A style, we're really able to, create some really good content and hopefully drive some ideas for your firm that you can take back and probably use. So once again, it is a very free-flowing interview style. It's quite conversational, and so we should have some fun this afternoon. So without further ado, I would like to just go from right to left, and definitely in no order of significance. Myself, I'm Matt Bunston, the country manager of Australia at Hubdoc. Really excited to be here today, and joined by Alistair Lamont, who's co-founder and director of Skippr. How's it going, Al?
I'm very well, thanks. Really happy to be here and look forward to a very well-rounded discussion on cash flow advisory.
Perfect. So believe it or not, Nick and Alistair are from the same office, but we'll sing it over to Nick Fox, our cloud account of Vital Edition. Thanks for joining us today, Nick.
Thank you. It's great to be here, and it is weird that Al's just in a different meeting room, but we'll pretend that it works that way.
It does, and just give everyone context. We're all in Sydney. We're probably in a 3-block radius, but there's a bit of a dust storm going on right now. And the gentlemen were just mentioning or harkening back to the dust storm in 2009. If anyone else in the call can remember that, so we're all staying safe inside right now.
That is an excuse.
Exactly. Perfect. So moving on. So a few housekeeping items we always like to touch on before getting into the content. First and foremost, we'll send a recording of the webinar, so keep an eye on your inbox. Generally, just be patient. We're gonna have about a 24-hour turnaround on that to get that webinar to you, and feel free to share that recording if you know anyone who might find it useful. Secondly, and perhaps one of the most important items is please ask questions. I think that we've kind of created questions that are aimed at kind of disseminating some content from Nick that we think would be valuable. But at the end of the day, we're here for you. You're here to get something out of this. So if there's a question that we've missed or something that you want to dig a little deeper on, please ask that in the GoToWebinar panel. Now, what's going to happen with regards to questions is attendees will be able to ask questions. We actually won't answer them immediately just because we want to have this free-flowing conversation. But we have another member on the Hubdoc team joining us, Audrey, who's going to be basically moderating the questions and posting them in our chat, so Alistair and I can ask Nick at the very end. So once again, if you don't get to your question right away, don't worry, we haven't forgotten about you. We will get to that soon. Finally, close on any unnecessary windows or applications. It might seem obvious, very important for me since I'm sharing my screen, but you came here for some learning. You came here to engage in this webinar. So if you can give us 45 minutes of your time, close out, turn your phone over, close Slack, whatever else you might be using. It'll just kind of overall enhance your webinar experience. The final thing I will say, and this is something that we get asked about on these webinars sometimes, if our faces are too big, although we all are handsome gentlemen, you can actually just drag the video, basically the picture of our video up, just so you can see the content a little bit better. And it's not super obvious on GoToWebinar, but once again, you just drag that up so you can see more of the content and less of our ugly mug. Moving on.
The content far more engaging.
Exactly. So today on the webinar, what we'll be discussing is, first and foremost, setting up the infrastructure required to offer advisory services. Secondly, the typical user journey for offering cash flow advisory. And finally, how to empower your clients with proactive advice and predictive insight. So these are very kind of high level topics. It's by no means going to kind of stick in these, lanes, but ideally this gives you a bit of better sense of the different discussion topics we'll be diving in today. So I guess without further ado, we are going to get right into it. And we're going to start at the very beginning, Nick. We can sort of hop in the time machine. Let's start with you. What is your professional background?
Well, so I started off actually in insolvency accounting, which if anyone here has done that, can get quite depressing. So in about 2013, I left the firm I was working with and started my own small consulting business. And from the very beginning, I think I started offering sort of the cash flow advisory services because in an insolvency situation, I mean, cash flow is just a massive issue that you need to sort out. So I was well skilled in that, and it was really quite valuable to a lot of our clients, or my clients at that time, to actually look at cash flow really under a microscope, particularly given that a lot of them were in that startup phase. So it was really that journey ended up with me selling my firm or merging with Vital Edition and becoming one of the partners here, and still offering those services to just more clients and having a team built underneath me. So that's sort of the 5-second review.
Yeah, so it's sort of safe to say that your experience in insolvency sort of drove your want to help businesses.
Yeah. It's much better trying to help my clients when they're solvent rather than trying to pick up the pieces at the very end. Because it's hard to save a company once they actually go into an insolvency situation. So it's much easier to help a company early on.
Completely, I'd imagine so. So talking about this kind of joining Vital Edition, when did that take place?
So that happened in 2016, and what happened was Vital Edition were looking for another outsourced CFO partner. I was on a bit of a different journey in terms of about to get married and about to embark on becoming getting a family, and I decided that being a sole operator probably wasn't going to suit me in that respect, and so timing worked really well. I ended up the guys here needed my resources, I needed theirs, and so it was actually quite a perfect marriage in certain respects. And then I got married again. So
perfect. Now, with regards to that kind of initial stages at Vital Edition when you began, is Vital Edition much different from when you started to where it is now?
Yeah. So the journey's been amazing. I mean, one, there's the development in just the app ecosystem that's available now compared to when I started back in 2013, where now our team is moving away from the Excel spreadsheets and into apps that really they cut down on time and they really create efficiencies for us whilst delivering the best bang for a buck for clients, which is probably the main piece. Really servicing the clients as well as possible.
And when we kind of talk about your clients, what types of clients do you serve? I think the word niche is brought up a lot. Do you have a niche, or are you pretty well across all industries?
Yeah, we're a bit client agnostic, so we'll see if we can help you. Effectively, we come in and have a look at the client, and if I can assist, I'll try and assist there. Otherwise, it can become difficult if you don't know what you're doing. So I do have a network that I'll refer other work out to if I don't feel like I'm capable or we don't have the capabilities in house. Because in the end, if you do a bad job with a client, that gets out to the market. So you're better off finding someone who's got the niche if you feel like you don't have it. But generally speaking, from my point of view, most companies, most businesses we deal with have the same fundamentals. It's just how do they get, how do they pull the levers on those fundamentals? And ultimately, cash is king. That's the main thing. As long as they've got working capital and as long as they can manage that, it's just it's what you really need to do in the business.
Well, I think that's a really interesting piece. It's when you realize you don't have sort of the expertise or services in mind to help the client, and you pass them along. Now, with regards to that, what are those services that you at Vital Edition really specialize in?
I actually work with a lot of PR companies and those service-based businesses. One of our other partners here is really specialized in SaaS-based businesses. But having said that, I've also, I've worked on cafes, restaurants. I've worked on tech startups, fintech, regtech, a whole raft of different kind of clients. So, as I said, we tend to try and find out whether we've actually got the fundamentals to actually work with that client. Otherwise, we do shift them along if that's the appropriate thing to do.
Mm-hmm. And with regards to kind of, do you have basically like a blanket level of services that you're delivering to every single client, or does that largely depend on their current needs?
Look, for us, it's all about the needs. So I won't sell something that someone, I won't sell something to someone that they've already got, and I won't try and replace, for instance, staff members, because we provide a full range of outsourced finance solutions. So we'll go from the bookkeeping all the way up to the strategic advice as an outsourced CFO. But if a client's already got a good bookkeeper, I'm not going to try and replace that good bookkeeper because I'm not going to step on any toes. And we also offer tax advice, for instance. But if the client's already got a good tax advisor, I'm not going to try and muscle in on that. The industry's too small, and you've got a name to maintain and your own ethics that you've got to stick to. So I just don't feel like it's the best thing to do to actually potentially try and poach a client effectively. I'd prefer to just work with them and work with whoever they want to work with as well.
Completely. I think that's interesting. It's sort of there's plenty of work out there for everyone, as I kind of hear a lot in this industry, and I think that maybe what's changed over the last 10 years or so is that everyone is so keen and happy to share information, pass along clients, etc., which is I think a pretty big breath of fresh air when you look at I guess accounting compared to any other industry out there. So Nick, we're going to dive into your tech stack a bit later, but just kind of in this conversation of beginnings, can you sort of recall your first encounter with cloud technology, and sort of like, did you have this aha moment, this is a game changer, or was it more of a slow burn in regards to that?
Yeah, I mean, my first real experience with cloud technology in this sense was Xero back in 2013. Coming from the insolvency world, I didn't even know Xero existed. So I saw it, and everything that we've been using had been desktop MyOb software, and most of the time when you're in an insolvency situation, the ledger's just completely, it's worthless. I wouldn't be able to tell most of the information in there. So when I saw what Xero could do and the functionality of it, I just thought that's amazing. And why didn't I think of that? It's one of those things that I recognized it as a game changer pretty much immediately, and then from there I basically stayed on Xero with all of my clients, and really try to get them onto Xero as our fundamental platform.
Nick, it sounds like when Xero started and cloud technology really came in, or accounting cloud technology came in, a lot of accountants were singing from the hills. Like it's a fundamental shift of the industry. Did that change your career direction when cloud Xero accounting came in on the cloud?
Well, what it did was it actually allowed me as a sole operator to set up quite cheaply and effectively, and really it allowed me to scale quite easily as just a single person. And I think we're going to see a lot more of that in the future. I think there's going to be a lot more people coming out of, for instance, the Big Four. They'll get their CA, CPA. they'll decide that they don't want to work 80 hours a week, and then end up opening up their own shop. And the ease that cloud accounting and the cloud computing is allowing for those guys to do that is just, it's a game changer. And I think that there's just going to be more of it in the future. So I really think, the ability of these pieces of software to basically allow someone to set up, I don't need all this tech infrastructure anymore. I can just do it with a laptop and away we go.
So that question from Al really leads well into our next topic here, right? It's kind of building that foundation. I think that, almost anyone who might be starting out on their own or starting to perhaps offer the type of advisory you guys do wants to lay a foundation, right? So basically before doing that, like what foundational items need to be in place? Basically what workflows, technology, et cetera, does a firm need before offering advisory services?
Look, from that point of view, for me, it's all about, it's all about the information. So you need the proper live information. Now, I'm a fan of Xero, obviously, but whether you use MYOB, whether you use QuickBooks, whether you use any other software, from that point of view, the main thing is it's got to be up to date. Because otherwise, if you don't have that information up to date, then you can't offer any advisory services. It's pointless going to the client and saying, well, the bank recs haven't been done, so I've got no idea what your P&L actually looks like. So let's sit here for an hour and talk about the weather. So the workflows really need to be strict on making sure that you get those fundamental things right, making sure that, for instance, if you're using Xero, that the bank recs are done, on as regular basis as you possibly can, that's going to fit in with a client, and make sure that you're getting that information in, making sure that you're also getting rich information. So training the client to send those documents in using, Hubdoc, to make sure that we're collecting the data that underpins the financial information that we're using. And then obviously making sure that everything's right in that data then allows us to provide those services, that advisory service. And particularly making sure that we've got those robust forecasts that really allow us to push out that advisory service. So for instance, when I'm offering, I think, this is doing that cash flow, I'll have weekly meetings with a lot of my clients where we talk about what the next 13 weeks looks like from a cash flow point of view, which is different to what the forecast P&L is going to say, which is different to a lot of other things. It's just, are we going to fall off a cliff in the next 13 weeks? So it's making sure that data to start with is right, because otherwise everything else is just pointless. It's useless.
Where's sort of the place of information we go to? Did you have kind of a mentor when you're getting into this? Was there a, whether it's someone in your industry, was there a piece of information that you really kind of went to find details on the best kind of in-class apps out there?
Look, someone who actually helped me out a lot was Guy Pearson from Interactive Accounting. Guy and I actually went to school together. And so when I started out by myself, I looked up and saw that Guy had started Interactive, and he obviously went on the journey a lot earlier than me. And it was really good to get his input and insights, because otherwise I would have been fumbling in the dark. I would have had no idea and had to search it all myself. And I still did search a lot myself, and to be honest, made a lot of mistakes. But that's the best way to learn sometimes. But it was really useful having Guy help me out. And then a lot of the apps as well, they release blogs, and so it's just trawling through that. But you've got to have the time to be able to do that as well.
Completely. I think that's something that we've touched on in our other conversations is I think that there's a fear of sort of jumping in at some point, and maybe a fear of making mistakes. But as you probably would know and mention that kind of making mistakes is not a problem, right? You can actually learn and grow from there.
Yeah. One of my mentors, who's actually my old boss from the insolvency firm I used to work at, he once said, you usually get about 65% of your decisions right, and if you're good, you'll get 67% right, and that's about as much as you'll get. And I've sort of taken that on board, and you run with that. You go, I'm not going to get everything right. We all make mistakes. It's just how do we learn from those mistakes and don't repeat them.
Absolutely. So, kind of talking about cash flow advisory, right? Kind of in the fundamental piece of this webinar, this can mean a really different thing depending on the firm. Like, what does this mean to Vital Addition?
So for us, for me and for us, cash flow advisory is very much, it's more of a tactical discussion. So I can sit there and show a three-way forecast that's built over the next year for one of our clients. But I find that that's a high-level discussion. So that'll show a cash flow, but that cash flow is probably not as accurate as when I'm looking at a cash flow advisory side of things. I'm talking about sort of the next 3 months, really trying to refine down what's actually going to happen in the next 3 months, where's the cash going, and it's all based on reality. So we pull the data down from zero. We say, all right, it's only going to be, invoices that we've already issued that we're going to collect. That's the cash coming in. It's only expenses that we actually know are going out. So it's all based on reality, and it's all based on the most accurate picture we can possibly paint for that shorter period of time. And it's about making those tactical decisions. And I think going further than 3 months is just not worthwhile, because I couldn't tell you what's going to happen from a cash flow point of view, even in Vital Addition in 6 months' time. I could, we could get fairly accurate, but I wouldn't bet my house on it. So it's effectively just knowing what the next moves are over the next 3 months, and I think that's a really good window to look at.
Now, I know you offer this as a part of your CFO service. What was the impetus for kind of including cash flow advisory within that?
So one of the reasons why we did that is it's such a crucial part for a lot of businesses. As I said, when I came from insolvency, I understood that cash flow is so key to every single company, regardless of who they are. And so every single company or business, they all need to make sure that they've got their cash flow sorted out. And it's such an integral part of any business that it's just not offering that service would be quite, I think it'd be remiss of us. We're not giving the best value to our clients if we do that. So I roll it up into the packages. There's also a bit of a cash flow advisory as well. To be perfectly honest, there's an immediate impact you can see with the clients. They understand it as soon as they start getting it. They understand it. Whereas some of the other strategy discussions we have can get a bit lost if the client's not well versed enough in finance, and so it's not an esoteric discussion. It's more of a tactical discussion, and you can talk to them and you can show them where their money's going, and they get really interested in it. So it's an easy win as well.
That's great. That's great. So, now we're actually going to transition over to Al. Obviously, Al from Skippr, actually helps with a lot of these cash flow problems that we're speaking of. So, Al, I'm gonna toss the presenter role over to you and let you take her in.
Thanks, Matt, and we do indeed. Nick, like we've worked together and forming out and shaping out this cash flow advisory process. This is, of course, applied within our tool as well. But when you kick off with your clients and you're looking at your portfolio of clients, how do you pinpoint the clients and really create that short list in order to determine who is going to be really who's going to benefit the most out of cash flow advisory processes or services?
Look, there's a couple of different ways we actually do that. Some of it is just talking to clients, and the classic, and I imagine some of the attendees would hear this all the time, is someone saying, I've looked at my profit and loss, I'm making money, but I've never got any cash in the bank. And as soon as you hear that, that's bang, let's talk about cash flow advisory. Let's talk about what you're doing with your cash flow and how we can help you manage your working capital. It's really, really important when someone says that to jump on that, and that's really where you can add a lot of value very quickly to a client. Another way is if you've already got them connected to Xero and you're already working with them, say as a tax client or another advisory service, you can actually have a look at their balance sheets and you can have a look at their profit and loss, and you can actually see whether they're actually suffering that problem as well. So you can actually see from looking at their accounts receivable and their accounts payable that that they will have cash flow issues, whether they're talking to you about it or not. You'd like to think that they want to talk to you about it, but some clients don't necessarily do that. You also can identify early on whether they're going to have those issues and jump in early and try and remedy a problem before it becomes a problem. So there are those two ways to do it. And as I said, sometimes it's just you bolt the service on because it is an easy win, and it's also it's just really useful for clients to have.
Yeah, it's always a nice carrot for for a future conversation and a more in-depth discussion about other parts of the business. And when you started talking, well, you've probably approached them with a forecast and you're starting to help them see that next 30, 60 days. What does the actual cash flow advisory service look like? How do you structure that?
So I really try and make it a regular meeting. So always, I've got a bunch of meetings lined up Monday morning, Tuesday morning, where we sit down and we go over the models that we send out to them, and we say, look, this is what's happening in the next week. This is what's happening over the next month. This is what's happening over the next 3 months. Particularly with service businesses, sometimes you'll be saying, look, you need to really, one of the big things you need to do is convert your WIP into billings, because I can see you're going to fall off a cliff. And you can also, so it's that strict structure about making sure that we've got that regular meeting in, you're regularly talking to them, you're regularly sending them updates. And then also it's about making sure that you're on top of the cash flow so that it's not just waiting until the next meeting. Because if I was talking to someone yesterday on Wednesday and then today on Thursday that something happens in their account, I don't want to wait till next Wednesday to go tell them about the issue that's come up. I want to call them or email them straight away and let them know. So obviously your tool helps me do that as well, because it has a live feed coming through. So it's brilliant being able to do that and understand what's happening and jumping on immediately.
And how, I suppose, in preparation for each of these meetings, how much time do you reckon you're spending in preparation?
Well, it was interesting. When we used to use Excel, it was probably, a good hour and a half or so, just making sure that the cash flow model that we were creating was right. In preparation, and that was just making sure the model was right, making sure that the sums were correct and making sure that the information in was correct. Whereas now using Skippr or any other tools, effectively it'd become, it's about half an hour prep, just looking at the model, understanding where they're going to have issues, making sure that I've got all the notes that I need to make and all the things that I want to bring up with them. So it's comparing the model to what's in Xero, for instance, making sure that the information's there. And so just there's not a huge amount of prep anymore because everything's in the cloud now.
Yeah, that's so important. Well, I think, more time saved is more margin earned. And you were mentioning, you were used to use Excel in providing cash flow management and direction. Often seen as quite a disengaging platform for a client. People like pretty pictures, like they don't engage with spreadsheets. How do you, and now with tools that are more engaging, it's still a challenge, I think, to try embed habit and process. How do you keep them more engaged, and how do you keep them on the front foot, ahead of the curve?
Basically, you try and make sure that they can see the difference between Well, they've got to see the value that's being added here, and effectively, it's actually quite easy with cash because people are always interested in cash. I've never met a business owner who doesn't want to know how their cash position is going, and they want to know. Basically, it comes down to when they can draw money out, and it comes down to the profits. So keeping them engaged is about making sure that they can see the end goal. What are they doing this for? And generally speaking, it is to make sure that they're getting a return on their hard work.
Yeah, it's so true. And well, I suppose with these kinds of services now being more front and center to building out a firm, but also building out your client base. In 5 years, how do you think your role is going to be different? What do you think you'll be spending most of your time doing?
I can see myself doing more work on advisory services. I can see a lot more automation coming into the picture. So I can see, for instance, the general bookkeeping, like the bank reconciliations, will probably start moving more towards less manual input and more into just checking and making sure that you're doing a proper review. So moving on to that high level advisory service is actually, I think it's the key here. So I can see myself doing much more strategic work with the clients. I can see my juniors doing less of the data input and more of learning about the strategic advice that we can provide. So that's sort of the direction that I see things going here, and particularly that automation side. I still think there's going to be a place for us to be talking to the clients about what the information that they're receiving means and interpreting it for them. I just don't think we're going to be creating that information in a hands-on or manual process anymore.
I totally agree. Well, that is being driven by technological change, where we're starting to get a lot more meaning out of all the data, which leads us onto our next area of people and technology. Vital Addition, that you identify your primary workflows based around the 4 I's of finance, and that's information, insight, ideas, and initiatives. Technology must underpin these 4 I's. What is VA's tech stack, and how have you come to form out that tech stack?
So what we do is we basically we start with zero. That's effectively where we underpin all the information. I like to look at zero as sort of the net that catches all the information and then can interpret and deliver it back. Then on top of that, we obviously use further tools like Hubdoc and Receipt Bank to actually capture the data that's coming in and help us improve those processes. So that really helps us to make ourselves more efficient in terms of collecting that information off the clients, so that we do have that robust data. We were using Excel to present financial documents and management meetings. We started shifting over to Fathom, which was a good tool, but it doesn't do its forecasting as well as we'd like. So we moved on to Futurely as well, and we're just trialing that right now. And then after that, we look at tools that are oh, sorry, I also forgot the shameless plug of Skippr. We use that with a cash flow management aspect. But then after that, it really comes down to what does the client need. So we're a bit agnostic in that respect, but we always try and find how apps will fit into that ecosystem. So since we use zero, we do look at the app marketplace there, and we try and figure out what's the best in breed for the particular client or the need that the client has. So it's really important to be a bit agnostic on those things, because just because one client used Vend doesn't mean that another client will use Vend. Maybe they need to use Counter or something like that. So it's just what is best for the client, and that's really where you've got to get your fundamentals.
Yeah, you noted like we've got apps at the beginning of the I suppose the cash flow cycle, ingesting data, so Hubdoc and Receipt Bank. Then in the middle is reporting and managing and giving meaning to it. We always get asked this question as well. With all the reporting apps, how do you differentiate yourself? How do the apps differentiate themselves? Like Skippr, Futurely, Fathom. From your perspective, how are they different?
Look, so I was looking at it from the point of view of Fathom was, that was a great app that really talked about what had happened, and it presented it in a really good way. But it didn't really talk about we're forecasting and what's going to happen. And realistically, my clients don't really engage with us to tell them what happened per se. What we want to be doing is telling them what happened and then how do we improve from there and where are we going from there. So that's really what I find. Futurely, I'm finding is very good at doing that, but they're doing it at what I was talking about before with a high level viewpoint. So I've got a 3-way forecast out of Futurely. I've got my balance sheet, I've got my cash flow, and I've got my my profit and loss forecast for say the next 2 years. But that cash flow tool in there in Futurely isn't telling me what's happening on a weekly or a daily basis with a huge amount of accuracy. So that's where I jumped into using something like Skippr, which is effectively doing the tactical, that 3-month view. And it's really based on the accurate information that's already in Xero. So the differentiation is there. It's just how do we actually use that data and how do we actually manage the conversations with the clients as well. So, I was looking at it from there. You've got the high level view and then you've got the tactical view. And those are two separate things for a business owner.
Okay, great. And well, Matt, I think it's now a good time to have a couple of questions. Oh, Matt.
There you go. What's a webinar? What's a webinar without some text? There we go. So yeah, we're going to jump into some questions in a moment here. We actually have a few really, really great ones. First and foremost, we're just going to kind of, once again, provide offers from Hubdoc and Skippr real quick, and then we'll jump into the questions. So as I think Nick mentioned, Hubdoc is a bookkeeping tool at its core. We streamline the bank reconciliation process, and what really makes us valuable is in getting that source data, right? Source document at times directly from the supplier. And when you're looking at accurate, real-time, verified data, as any advisor would know, the source documents are integral in terms of that workflow. So all partners are actually available, and any practice can have a free lifetime VIP Hubdoc account. You can use the product, see how you like it, and then from there you can actually add clients from that free account. Just go to app.hubdoc.com/signup. And once again, Hubdoc was built at its core on making you more efficient when you're, closing out your clients' books. In doing so, one of the main value propositions of our tool is actually getting bank statements. So, when you're looking at closing out a file, whether it's month, quarter, or year end, and you're actually looking to verify data that you might have in your accounting ledger, that statement does really allow you to be, efficient as well as accurate when your time is most valuable. Over to you, Alistair.
Thank you very much, Matt. Well, yeah, when a lot of bookkeepers and accountants are capitalizing on using systems like Hubdoc, they're pulling in the data into Xero. We get a lot of that, the accounts receivable and accounts payable data. We mix that with the cash in bank, and we try to build a short-term visual forecast for small businesses to understand exactly what's coming up. We are offering this tool for free for both bookkeepers, accountants to use with their clients. It is a tool that is easy to use. It's not overly sophisticated in terms of trying to get granular on particular account line items. We're trying to get a short-term picture as quickly as possible. That data is being pulled in real time, and we're trying to keep the client one step ahead. the cash flow forecasting and cash flow management, a key lever of that, always entails actually managing your cash. Within Skippr, we're actually helping them. We help guide the user from problem to solution through understanding what collections they need to make, what payments need to be managed with suppliers, and like moving those dates around to understand the cash flow impacts that it has actually on your cash flow. And of course, the final lever, when you've got these inherent cash gaps in a company, we are actually able to provide finance in app. So in the end, our goal, of course, is to provide those small businesses with a far more confidence. And it's a tool that we're seeing a lot of bookkeepers and accountants use to help drive that confidence, but also improve that collaboration.
Excellent, perfect. So moving on to questions, we have a few really good questions. The first, believe it or not, is actually for you, Alistair, that I'll ask, and I'll let you ask Nick the next few. But it's a question on Skippr. The first part is, does Skippr allow cash flow forecasts based on fortnightly pay runs?
Simple answer is yes. Yeah, you can forecast it based out on a weekly, fortnightly, or monthly basis. And it's essentially a case of putting in that forecast pay run as a forecast rule, and it is then in the model and recurring moving forward. So it's pretty much set up like it's set and forget, and it's usually quite seamless in practice.
Perfect. Second part to that question is, does Skippr allow cash flow forecasts by tracking code?
So I assume that means tracking code within the invoices, so an identifier within the invoices. At this point in time, we aren't pulling those identifiers, but there is definitely a manual override within Skippr to create a unique forecast for particular like identifier or particular customer that's actually not even in Xero yet, because it's still in quote phase, for example. So Skippr, as much as we're trying to pull in a lot of live data and use a lot of that structured data to extrapolate a forecast, we still allow manual intervention on top to ensure you can get a realistic picture over the next 30, 60 days.
Perfect. So once again, those questions were from Sabine. Sabine, if you have any follow-ups, please feel free to ask them. You'll also be able to, send a follow-up to the email, and we'll be sure to direct any questions you have to Alistair. Perfect. So Alistair, I'll let you take the final two questions there from Ian in the chat section.
Yeah. So Nick, how do you work out how to charge for cash flow advisory? Like, how do you come up with that final number?
I think charging's always been an interesting thing for us, and I think it's been something that's been an evolution. When I said I made mistakes before, a lot of them were around fees and charging. This is an area that's just growing, and I think I said to the other day that if you got 3 virtual CFOs in a room, you'd come up with 6 different pricing models. For us right now, it's effectively we figure out how much time we expect to spend on these models and how much time we're actually going to put into them, and then we price accordingly. We always do a fixed fee, so all of our pricing is based on fixed fees, but it's all based on an estimate from the time that we expect to spend on the client. Whether that's right or wrong is still up for debate, and we have those robust debates here all the time.
That's never a sure answer, I'm sure.
Yeah.
And a second question from Ian as well. You've got a client that has tight cash flow, and they're not able to pay their bills on time. How do you reconcile risk in providing that cash flow advice and not being paid on time or not being paid at all?
That's actually a really interesting question, because it does go to sort of our ethics as well. These clients need this service; they really need that assistance. And effectively, the way that we do it, we use Practice Ignition for one, so we try to collect our fees on a regular basis through the bank on direct debit. However, if I was to give you the answer of what would happen in the event of an insolvency, is if you collect your money not on a regular basis and you manage to collect that money, it would effectively be the liquidator is able to claw it back as a preference payment. So you've just got to be really careful about it, and you've got to know when to actually stop the service. So if you see a client who can't afford you, effectively you've got an ethical obligation to say, well, either I'm going to bankroll this client for a little while, or I've got to stop my service. Unfortunately, it's a binary option.
Unfortunately, I suppose if you're using some of these cash flow tools to get a little bit more foresight, you're going to be able to see that risk ahead and manage it accordingly.
Yeah.
And that's why companies like Practice Ignition are being so successful, because they are making that structured payment mechanism far more palatable, and also de-risks the relationship as well.
Yeah, I mean, it always becomes hard when you're actually managing their accounts payable, and effectively you're saying, well, I know things are tight, but can you pay me, please? So it does remove that conversation, but it's also one of the ways that we view ourselves is we're not actually our clients. We're basically other employees of the client. So I talk to the client and say, would you not pay a CFO if they were sitting here in your business? Well, I am still your CFO. You should pay me as an employee. Consider me that way. I prefer businesses that we can partner with, as opposed to just have a transactional relationship with.
Yeah, very good point.
Perfect. Well, that wraps up all the questions we had today. So I did want to say a huge thank you to you, Nick. I think I can speak for everyone to say that we got a time ahead of today's webinar. We think it's going to be content that will surely live on, and people can kind of use it as a resource. But again, thanks for taking time out of your day. Thanks to all the attendees for being here. And I'm sure I'll be seeing both of you gents very soon.
Appreciate the time, Matt. And just a one last minute point. Skippr, we've put together a cash flow advisory ebook. And so you will be able to access that after the webinar as well. And that kind of structures a lot of the services around cash flow advisory quite well. And it's had some fantastic input from Nick. So Nick, thank you again for that. And if anyone has any questions regarding it, please get in touch.
Yeah, thanks very much, guys.
Cheers, Nick. Thanks, Matt. Thanks, everyone.
Have a good day, guys. See ya.
Thanks. There we go.